Hey everybody, it's Justin from Number Crunch Nerds. In this video, we're going to do sale of your rental property and how to calculate the taxable gain and the tax you're going to owe on that sale using TurboTax. I'm in the TurboTax Home and Business Edition. This is the 2022 edition. If you enjoyed this video, please don't hesitate to like and subscribe, and let me know in the comments what other tax issues you may be facing so that I can make some other videos about that. All right, so let's just jump right in. Over here, I have a little spreadsheet laying out the information that you're going to need to gather in order to get this information entered into TurboTax appropriately. So let's just go down the list here. The first thing you're going to need, obviously, is you're going to need your sales price. You're going to need your settlement fees. You're going to need your mortgage. Actually, you're not going to need your mortgage, but I'm going to put it on the list anyway so you don't get confused when we do the calculations in a minute, and I'll show you why. Real estate taxes, this stands for RE, real estate taxes. You're going to need to know that. And where are you going to get all of this information? Well, the most likely place, I'm going to bring in a little settlement statement here. The most likely place is going to be off your settlement statement from the sale of this property. There's a lot of different settlement statements out there. They all look a little bit different, but pretty much they have the same information on them. There's going to be a buyer's side. There's going to be a seller's side. You're the seller, so you're going to look here on the seller's side, and I can make this a little bit bigger here. You're going to have the gross sales price right there. And then down here, there's going to be adjustments to the amount that you ultimately receive. Reductions in the amount due to the seller, the reductions in the amount due to you. The ones that we're looking for are the settlement charges to the seller. This is going to reduce the amount you ultimately get. We're not going to be looking for mortgage, but if you do have a mortgage, it's going to be listed on here because as part of the settlement, the lender is going to be paid off through this process. So I wanted to make sure you're aware of that, but we're not actually going to use this number in the calculation. But you are going to use these settlement charges right here, and they may be all broken out, but usually there's a breakout, and they're also summarized into one line, which you can use right here. And then any unpaid real estate taxes, which are going to be reduced from the amount you ultimately get, we can use those in the calculation as well. So my numbers that I'm using here are slightly different, but this is where the numbers are going to come from. It's going to be from your settlement statement. So we need to gather up sales price, settlement fees. We're not going to use mortgage, real estate taxes. And then, of course, you're going to have to know your cost. You're going to have to know how much you paid for this property, as well as any improvements, any major improvements that you made to the property during the time that you owned it. That information is not going to be on your sales settlement statement. You're going to have to know that from prior documentation, from perhaps your purchase. When you purchased the property, there was a settlement statement then that would have your purchase price on it. If you made large improvements to the property while you owned it, you're going to have to dig up the documentation on that. For this example, I'm just going to say that the cost was $400,000. But if you have improvements, let's say you added on another section of the property and you had another $100,000 in that or whatever, you can add that into the cost as well. So for this example, I'm going to have a $700,000 sales price. We're going to say $40,000 settlement fees. We're going to skip mortgage, $1,000 in real estate taxes, and then I'm going to have the cost of the property be $400,000. So you need to gather up your numbers just like this right here. You're also going to need to know the purchase date, which in this case I'm just going to say for simplicity is the first day of January 2015. The sales date, for this example, this is a 2022 tax return, so I have a sale in 2022. If you're watching this in 2023 or 2024 and you're preparing your return for 2023, then your sales date would obviously be sometime in 2023, but the calculation is all going to be the same. So let's run through this real quick, and then we're going to start entering the information into TurboTax. So the first thing we're going to do is we're going to take the sales price, and I have a little Excel spreadsheet here, so I'm going to just be able to link it. Sales price, $700,000. Now my settlement fees, I'm going to put those in here, $40,000. And then my real estate taxes, I'm going to put those in here, $1,000. So I'm going to have a net sales price of $659. Okay, you don't want to use the full sales price. You're like, oh, I sold the house for $700,000. I sold the property for $700,000. But if you put that number in TurboTax, you're going to have a bigger taxable gain and more tax. That's not the number you want to use. You want to use the net sales price, which is going to be after all of these fees are deducted. These are real estate taxes that you, the seller, are getting deducted from your sales price. These are a whole variety of settlement charges, settlement fees, which you are getting deducted from your sales price, from the amount you ultimately receive. So this is what your net sales price is going to be, and this is the number you're going to have to enter into TurboTax. And as you're going to see a little bit later, TurboTax is a great software, but it's not a mind reader. It can't read your settlement statement and tell you what your net sales price is supposed to be. You have to figure that out. So that's what we're doing right here. We're figuring out, here is our net sales price. Now, depreciation for PY means prior years, all prior years that you own this property. Some people call that accumulated depreciation. You may have heard that phrase. And then we need CY as current year. We need depreciation for the current year. And you might be like, okay, where do I get those numbers? We're going to get them out of TurboTax, where I'm going to show you how to pull those numbers out of TurboTax so we can use them here in our calculation. So we're going to come back to this part of the calculation that uses depreciation to figure out ultimately what our taxable gain is, because we can't do that until we get to this part with the depreciation. So once you have gathered all this information, it's time to start putting some stuff into TurboTax. One other thing you're going to need to know, and this is actually the place we're going to start. You're going to need to know, right down here, your rental information for this particular year. In this example, I'm just going to say that we rented the property from the first day of January 2022 to the last day of January 2022. So we rented it for 1 month. My rent per month was $2,000, and we had repairs in that month of $500. This is going to be the example information. You need to gather up your specific facts. How many months was it rented for, etc. What's the rental price? All of your expenses that you incurred, you're going to have to gather those up. For this example, I'm just going to have one expense just to make it simple, but I will show you where to enter the other expenses as well as we go along. So let's get started. This is a rental property. A rental property is a business. It's a business property, so we're going to be in the business tab right here in TurboTax. I'm going to hit continue. I'm going to choose what I want to work on. Now, the first thing we're going to have to do is we're going to have to get the property into the system and have it tell us what the accumulated depreciation is for this property. Now, hopefully, if you've been using TurboTax to track this property in the past, it should already be in here, and it should already be deducting that depreciation for you year after year. If you used another software or a software that doesn't talk to TurboTax, it's not going to transfer the information automatically. So you're going to have to determine what it is in here, which I'm going to show you in a second, and then we're going to use that information to make this sale. So once we're in the business tab, we're right here in rental properties and royalties. We're going to click update. Income from rentals or royal property that you own. We will cover rental property income and expenses. That's going to be what we're talking about today. Natural resource royalties, we're not talking about that. Intellectual property, we're not talking about that. Do you have any rental income and expense for 2022 for property that you own? The answer is yes, so we're going to click that. Let's see if you are a real estate professional. If you are a real estate professional, you probably are aware that you are a real estate professional. There are some tests down here about how many hours in a year you spend doing real estate activities. If you spend more than 50% of your time doing things related to real estate, if you don't think that you're a real estate professional, chances are you are not. If you just have one rental property or even a couple, but you're not actively engaged in the business of real estate, you're not going to qualify for this. So just click most people watching, most people who have one or two rental properties are going to click none of the above here. You're not a real estate professional. If you were, you get a little extra, you get a little bit of extra deduction as we go along through this process. But for most people, the answer is going to be no. So we're going to click that. We're going to click continue. Okay. Is this a rental property or a royalty? The answer is yes. So the property description that we're going to put down, I just like to put down, the sort of like an abbreviated name of whatever the property is. So we're going to put Elm Street, right? Whatever street it's on. I'm going to say it's in the United States. I'm going to put down an address here, 1234 Elm Street. I'm going to say that's in Phoenix. Obviously, you're going to put that wherever it is. That would be in Arizona in this example, and I'm going to put 85004. So you just put in the address, a description for the property, and continue. What type of rental is this? For this example, I'm just going to click a single family property. Okay, now here is where you need the first place you're going to need to click that this property has been sold during the year, because by selling it, it's only going to calculate the depreciation that we need up through the date of sale, which in this example is January 31st, 2022. In your example, it'll be whatever the sales date was. So we're going to click this. I sold or disposed of this property in 2022. And it says you're going to enter the details later. Honestly, it's a little bit confusing where you have to enter the details, but we'll get into it in just a few moments. So because we're doing sale of a rental property, I want you to click this right here. And then we're going to continue. All right, was this property rented for all of 2022? In this example, the answer is no. We only rented it from January 1st, 2022 to January 31st, 2022. So the answer is no. We did not do that. Days rented at a fair rental price. I'm going to put 31 days. The month of January is what we rented it for. In this example, I'm going to say that there was no personal use, that this was purely a business property, a rental property. If you have personal use, if it's kind of a mixed use property where you rent it sometimes and you use it personally, sometimes that gets into additional complications that TurboTax will walk you through if you make this selection right here, and if it's more than 14 days, it'll start to ask you some more questions. For now, we're just going to say this is strictly a rental property. Continue. Okay, for this example, I'm going to say yes, property ownership. I owned 100% of this property. If you answer no, that's okay. But what it's going to do is it's going to start splitting income and expense between you and whoever the other owners are. So you're only going to get your portion of the rental income and expense and depreciation, etc. if you click no. For now, we're just going to keep it simple and say yes, that we own 100% of the property. Okay, let's find out if you're an active participant in this property. If you are an active participant, you will get a little bit of extra benefit on the deduction side, as opposed to if you were not an active participant. Now, what does it mean to be an active participant? Well, here's the simple rules. I own at least 10% of this property. We already said we own 100%, so the answer to that is yes. And I make major management decisions for this property, such as approving tenants and authorizing repairs. This is going to be the key one right here. Let me give you even a simpler way to determine if this is you. If the stove breaks, if the refrigerator breaks, are you the person who is going to get the call from the tenant in the middle of the night when that issue needs to be addressed? If the answer is yes, it is highly likely that you are an active participant in that rental property. If, on the other hand, you have hired a property manager and that property manager handles approving the tenants, and that property manager is the person or company that will get that call about the broken refrigerator in the middle of the night, then most likely no, you are not an active participant. If all you're doing is having a management company deal with everything and you just collect whatever the net rent is after you pay the management fee, after you pay all the other expenses, etc., then chances are no, you're not an active participant. But if you're the one who's actually talking to the tenants, approving the tenants, etc., then chances are yes. I'm going to put yes, because a lot of people are really in this situation where they actively participate. If you have a management company, I would recommend you consider clicking no. Okay. This you get asked on any business venture that you're in. Did you pay anyone more than $600 for work related to this property? This is all about filing a certain form. It's called the Form 1099 NEC, and it's about if you pay certain people who work on your property, like painters, like roofers and any kind of repair person or interior decorators or anybody, any kind of independent contractor, it's possible you have to file a form and tell them and tell the IRS how much you paid them during the year. The simple answer is pay by credit card or pay by any kind of third-party electronic transfer like PayPal, Venmo, Cash App. What are the other ones? Zelle, any of those. If you pay that way or by credit card, then you never have to worry about this. It's when you pay these people in a check or cash that you would be required to file this form. There are more subtleties to it than just that, but if you want to never have to think about this as a business owner, pay everybody by electronic form of payment through a third party, not an e-check, through a third party vendor like PayPal, Venmo, etc., or pay by credit card. For now, I'm just going to say no. But if you did pay people by check, it is quite possible you would need to file these forms. And these forms are due in January of the subsequent year. So for 2022, they would have been due in January 2023. For 2023, they'll be due in January 2024. And I'm going to have other videos coming out as we get closer to January 2024 about how to file this form using TurboTax. So you can keep an eye out for that. All right, so let's go. Let's continue. If you have QuickBooks, etc., you can certainly download. I'm going to just say we're going to enter the information ourselves because a lot of people are not up to the level of actually like downloading stuff out of QuickBooks. This rental business may not be big enough to actually track it in QuickBooks, etc. So I'm just going to enter it myself. Is your property in any of these like designated disaster areas? For this example, I'm just going to say no. If you happen to be in one of those areas, which is probably unlikely for most people watching this video, there are some special benefits tax benefits that you could get for having your property located in one of these unfortunate areas right here. All right. Finally, we get to the place where we enter the information. That was all the property profile stuff. So now let's quickly enter in the rest. And for this example, it's going to be real simple. Rental income, if you happen to receive rental income like on a form, 1099 miscellaneous or 1099K, like it says to you, this is how much rental income you've received. You may get something like that from a management company, for example. Then you would enter it in one of these two slots right here. For this example, I'm just going to keep it simple and say, you know what? The tenants just paid me, in a check or automatic transfer to my bank account, etc. So we're just going to enter the amount. In this example, I had 1 month, right? So it's $2,000 of rental income. I put 200. I meant to put 2,000, and that's all you got to do. Just put your total amount in there, and that's it. So there it is. Put in whatever rental income you received for the year. Now for expenses, I'm going to choose what I want to work on right here. There's all kinds of expenses that you may have in your situation that you can enter. Any expense that is relevant to this particular rental property you can put in here. For this example, I'm just going to put in repairs of $500, which I had over here on my list. That's all we're going to have for this example. Going to keep it nice and simple. All right, I'm not going to, if you have mortgage interest, you can put that in. I'm not going to deal with that. Any other interest? None. Did you refinance? No. Other expenses? No. So we're done. Okay? We're done getting the property in here so we can figure out what the depreciation is on the sale, because that's what we're trying to get to, is the sale. But in order to get to the sale, first we have to get the property in, which is what we just did. All right, now, sale of the property and depreciation. So let's click on this, start. Okay, depreciation for your rental property. Do you have assets for this property that can be depreciated? Okay, now, you can depreciate the building itself. You can depreciate improvements that you made to the building during when you owned it to the property, appliances, furniture, all kinds of stuff. Now, in more recent years, there has been tax rules that allow you to take what's called bonus depreciation or Section 179, or other types of accelerated expensing for purchases that were under $2,500. And I have other videos on all of those things if you want to go check those out. So it's possible you may not actually have any other items other than the building itself that need to be depreciated. In this example, we're just going to do the building itself, but you can repeat this exact process that I'm going to go through right here for other assets. So I'm just going to say, yes, we have an asset for this property that can be depreciated. And I'm going to click continue. Here's the question about, did you buy anything that cost $2,500 or less in 2022? If you said yes, and you hadn't included those in other places within TurboTax, you'd be able to immediately deduct those as opposed to depreciating them. We're just going to say no for now to keep this simple. Okay, describe this asset. So it's rental real estate property. This is what we want right here. This is the actual structure, the building, the single-family residence, the home, the item that's being rented. We're going to put that here. If you have other stuff, appliances, carpets, furnishings, things that are going to be depreciated, you can repeat. You're going to do this one at a time, asset by asset. Each one you're going to do one at a time. You don't do them all together. That's why we're going to do one. And if you need to do others, you can repeat this process. So we're going to click continue right here. How would I categorize this? It's a residential rental real estate, continue. Okay, now we have to put this in again. It's 1234 Elm Street. The reason that it already knows right here what it is, but it asks again because it's possible this could be like, refrigerator inside of 1234 Elm Street, etc. Carpeting, improvements. I'm just going to put this is the actual property itself. And it doesn't really matter what you type here exactly. It's just a description. All right, so the cost. Here is where we finally get to the cost. Let's go back over here to our Excel spreadsheet. The cost in this case I have is $400,000. So you're going to need to know how much you paid for this. And if you have any major improvements, you're going to need to know that. Or if the improvement, you added on another part of the house or something, you can just repeat this process again for that part separately. So this really is just the actual cost when you purchase the property in the first place. And then you can repeat this process again, adding in, let's say you added on a $50,000 addition. You come back, you do this again after we're done here, you put $50,000 right here for that addition. Okay, now here is what I want you to notice. Cost, and then down here, cost of the land. Okay, so I typed in 400,000 here, but 400,000 is most likely what you paid for the house and the land, right? You didn't pay for it separately. So this actually isn't correct. We're going to have to take that out. You can't put the full purchase price in for just the building. You have to separate it out into the cost of the land. Now, if you don't know what the land cost versus the building, and a lot of cases you won't. In fact, most of the time you won't, because on your settlement statement, it's not going to say. So here's my general practice. This is not an IRS rule. It's not a tax law. It's just a practice that I do, that I know a lot of other people tend to do when you're not sure how to do it. What I do is I take this number, your purchase price multiplied by 80%. not 0.8, and that's going to be the land. We're going to do an 80-20. We're going to put 80% to the building, 20% to the land. So I'm going to put 320 in here, and then I'm going to put the rest, which is 80,000 here. And as I said earlier, we acquired this property for this example on 1/1/2015. Okay? If you have no better information in the settlement statement, like when you purchased it, about how much the land, if it actually says how much the land costs, then perfect, then you have the number right here. But if it doesn't say, which a lot of times it won't, you're going to have to make some kind of allocation. So take your full purchase price. Very standard practice is to just do 80% to the building, 20% to the land, and that's what I've done right here. Okay, so continue. All right, now here is where you want to check. Tell us more about this rental asset. This item was sold. This is what we need to check right here. So it will only calculate the depreciation that we need up until the date that it was sold. So I'm going to click that. And then it says date you sold it. And if we recall, I said we sold it on 1/31/2022. So we're going to enter that. All right. And then I'm going to say yes, that I have always started using this item for business. Again, if you have a mixed property with personal use, there's some more allocations that will occur between your personal use time and your rental time. For this example, and because a lot of people just strictly rent properties, we're going to keep it simple. This was used 100% of the time for business, for renting. All right, so continue. Let's see. Oh, enter the date we started using it for business. We left that off. That was, in this example, I'm just going to say that's the purchase date. Obviously, in a real world situation, it's possible that you didn't buy it and rent it on the same day. So whatever day you started renting it would be the date you would put in here. I'm just going to say it's the first day of 2015. Okay, here we go. Now, here is where TurboTax tells you what the depreciation is, or what it should be for all prior years. Amount of depreciation taken in prior years, not including any Section 179 or special first year special depreciation allowance deductions. In other words, this means bonus depreciation right here. If you took any 179 or bonus depreciation, this number that TurboTax is calculating would not be included in that. And that often will not be the case for the actual building, but it could be the case, as I mentioned before, for the refrigerator or the microwave or other things that you put in the house that you took either bonus depreciation or Section 179 on that. So you would need to know what that is from your prior tax returns, and you would have to include it as part of this number. In this case, we're going to go with the simplest example that you just took regular depreciation, which the system calculates for you. And this is what the number is. This is what you would have taken between the first day of January 2015 through the 31st day of January 2022. First day of January 2015 through December 31st, 2021. This is everything from all prior years. The 1 month of depreciation is actually not included in this. This says taken in prior years, meaning not 2022. So there's going to be one extra month of depreciation that we need to find. And I'm going to show you where to find that in just a second. But before we go there, I'm going to go back to my spreadsheet. Remember, I had two items right here: depreciation for the prior years, all prior years, and then depreciation for the current year. This number, that's your depreciation for the prior year. So I'm going to put that in right here. 6726. That's the first number that we're going to need to calculate our gain on this property. All right, so I'm going to continue now that we've figured that out. Does this require any special handling, is what TurboTax calls it. This asset was a rental. This is all I need to read right here. This asset was a rental. Yes, it was. So yes, it does require that. Depreciation deduction amount. Now here, your depreciation deduction for 1234 Elm Street for 2022 is $364. So I'm going to go over here to my spreadsheet and I'm going to put that in right here, $364. So this is the total depreciation right here, 61090, between 1/1/2015, the day I purchased it and placed it in service, meaning placed in service means I started renting it. In this case, those are the same dates, but in your case, it might be a little bit different. And then through the day I sold it. So from the day I started renting it to the day I sold it, this is the depreciation. And we need to know that to determine the gain. Because TurboTax is actually going to ask you for this number as soon as we get to finalizing the sale. All right. It tells you what it is here, but when you actually get to the sale part, which I'm going to show you in a minute, it doesn't know what it is. It asks you, and so that's why we have to know. If you forget, I'm going to show you a second place to find it in just a minute. But if you fail to write it down or whatever, as I'm doing right here. So we'll get to that in a second. All right, so continue. All right, now here, this is just a list of your property assets. Here is the actual building itself, 1234 Elm Street, placed in service, meaning I started renting it on 1/1/2015. I didn't take any 179 or bonus depreciation on this property. So my depreciation for this year is the $364. If you had other assets in this property that you were also selling, like as part of it, they would all be listed here. You would go in and you would add an asset right here. Add an asset, add an asset, add an asset, and you would have a whole list of assets that are related to this rental property. And for each one, you would click, I sold it in 2022. Then it would calculate only the depreciation on it through the date of sale. And then you would make a list. Just like I have a list here, you'd have a list for each one. And then you would be able to determine what your gain is on the sale. So now we're going to click done. Now you're like, okay, where's the gain? Like or the loss on the sale? Well, we haven't entered that yet because we haven't actually typed in the sales price anywhere, have we? And that's a little bit misleading within the TurboTax system because it says sale of property right here. But this particular section that we're working in, this is to tell the system that we sold this property so it can stop calculating depreciation on it. That's what this is for. And it's also for us to be able to figure out what the accumulated depreciation is in order to determine the sale coming up next. So here's what we're going to do. We're going to go back to the business tab right here. We're going to go to continue. I'm going to choose what I want to work on. This time we're going to go all the way down to the bottom here, the last item, sale of business property. And we're going to go to update right here. Okay? Sale of business or rental property that you haven't already reported. We're going to say yes to this because we haven't reported it. Did you see me type in the sales price anywhere? No, because there wasn't anywhere to type in the sales price. You type it in here. So here's where we're going to enter it. So I'm going to continue. Okay, sale of the business or rental property. Do all of the following apply to the property that you sold? You own the property for more than 1 year. In most cases, that's going to be yes for people who are renting property. I think it's highly unlikely that you purchased, rented, and sold the property all in 1 year. I'm not saying it's impossible, but for most people, that's not going to be the case. You sold it for a profit. Certainly, it's possible to sell a property for a loss, but in 2022, 2023, 2024, I shouldn't say 2024 because that's in the future of when this video is being made, but at least right now in 2023, real estate prices, although real estate market has slowed, prices are still pretty high. People who've held on to these properties for, a number of years or could possibly even decades are most likely selling at a profit. So that's going to be yes for most people. If it's not, you're going to have to do things a little bit differently. But for now, we're going to assume you're selling this at a profit. Is this property something that you took the depreciation deduction for? And the answer for most people is going to be yes. You should have been depreciating this property and taking those deductions since you started renting it. If you didn't, and now you're selling it, unfortunately, the tax law is such that it's just going to assume that you took those deductions, and unfortunately, you're not really going to get the benefit of it because you never did it in the past. Now, it's possible you could go back and amend tax returns, but if you are in that boat, that is going to be the time when you need to engage a CPA in your city to help you with something like that. So hopefully you've been depreciating these. And if you're using TurboTax and you entered the information just like we just entered it, but you did it, years ago when you first placed it in service and it's been being tracked in TurboTax, then you would have taken the depreciation because TurboTax is really good at calculating the depreciation you're supposed to be taking. So for most people, it's going to be yes to all of these. You own the property for more than a year, selling it at a profit. You took depreciation on it. So we're going to click yes. Okay, here finally we have come to the screen where we're going to actually enter the sales price and be able to get that gain calculated, that taxable gain, as well as the tax that's going to be determined on that by TurboTax. So you have to enter the description of the property again. There could be multiple assets. There could be multiple properties. TurboTax is not going to know which one you're specifically entering right here. So we have to enter that again. Okay, in this example, the date acquired was 1/1/2015, and the date sold was 1/31/2022. Now, total sales price. Now, remember back here where I said what you want to do is you want to take the sales price, you want to adjust out your settlement fees, you want to adjust out your real estate taxes, and you want to get to a net sales price. This is correct, but TurboTax wants to do it slightly differently than this. You're going to see that my answer and TurboTax's answer is the same answer as we get to the next screens. But what TurboTax wants you to do is it actually just wants you to put in the full sales price right here. So in this case, I'm going to put $700,000. Now you're like, well, wait a minute. What about the settlement charges and the real estate taxes that are going to be going, that they're going against what I'm ultimately receiving from this sale? Well, TurboTax wants those in the next box. It says right here, plus the expenses of the sale. And that's going to be these right here, the settlement fees. It could be your real estate broker commissions. There could be a whole bunch of stuff in that settlement statement that all gets wrapped up into that one number, which is settlement fees. TurboTax is going to want that number right here. So it wants the cost of the property or the tax basis plus the expenses of the sale. So this is what it wants. It wants the cost, the original cost, and it wants the expenses of the sale, which are these two right here, and it wants them together in the same line. And that's fine. TurboTax will get to the same answer as we're going to get to over here in the spreadsheet. It's just ordering them slightly differently. So what we're going to do for TurboTax is we're going to take the cost, which is $400. We're going to take the settlement fees, which is $40, and we're going to take the other costs of the sale, which is $1,000 in this example. So that's $441,000, and I'm going to put that in right here, 441,000. Now the depreciation taken on the property, that's this number, which we just calculated right here, 61,090. So those are the numbers that you need in order to determine the gain. Now, in my example over here, I'm going to take the cost right here, which we have up here is $400,000. And then I'm going to take the total depreciation right here. And I'm going to say that my adjusted tax basis is $338. And then I'm going to go right here. I'm going to say my net sales price, which was, we calculated that as $659. And then I'm going to take my adjusted basis, and I'm going to say that this is my gain. This is my taxable gain of $320,090. And let's see if TurboTax determines the same taxable gain on the sale of this property as we go to the next screens. Okay, so we're done on here. We entered everything about the sale. Let's hit continue. Okay, what type of property is this? Property other than real estate property that I took depreciation on? No. Real estate that I took depreciation on? Yes. So we're going to click that. Continue. Installment sale. For this example, I'm just going to assume that this is a traditional sale. You got all your money on the sale at one point in time. Once it's settled, once the bank paid you, you had everything. It's not like you're going to be paid in installments over years to come. There, you can do that, but that's going to be a different tax treatment, which we're going to discuss in a different video. Do you want to report this sale as an installment sale? No. Okay, so here we are. Here is the property sale summary. This is what we've entered so far. Remember, if you had other assets like refrigerators and stuff that were being sold kind of as part of this, they would all be listed here as well. So for now, we're done because we just have the one asset. So I'm going to click done. Let's see. Here is what we have so far. So this is, I don't know exactly why TurboTax calls it copy one, but this is actually going to be the page where we're going to go look in a minute on the actual tax forms, and we're going to be able to see the gain that we just calculated over here in the spreadsheet. So let's just click done. If you have no other sales, select done. So we're going to select that. Sale of other business property for this example, we're just going to say no. I'm just going to exit out of this because this is going to ask you a whole bunch of other questions which we don't need to know about right now. So let's see if we can figure out if TurboTax has calculated the same gain that we were expecting. I'm expecting a gain of 320,090 based on everything that we entered. So I'm going to go to Forms. When you're in Forms, these are the actual tax forms that get filed. You want to go to 4797 right here. Copy 1. Enterable 4797 copy 1. Sale of business property page 2. That's what this is right here. Enterable 4797 copy 1. We're going to go there. Okay. This is the sale of business property. This is the this is the form. This is actually page 2 of the form. That gets submitted to the IRS that shows this calculation. Here's the property, 1234 Elm Street. There's the date purchased. There's the date sold. Scroll down here, and here it is. Gross sales price $700,000. The cost. Remember, they took the original cost and they added in the selling expenses. That was the $441. Depreciation allowed or allowable. Remember, I said allowed or allowable. If you didn't take it in prior years and you want to go back, I would recommend you engage a CPA to help you potentially grab those deductions. It might be worth it. It might not. Very complicated. Hopefully, you were taking them all along in TurboTax or another software. Adjusted basis, and then finally right here, total gain. This is your gain on the property, $320,090, which is what we were expecting right here, $320,090. That is how you calculate gain on the sale of your property. Now, if you want to see the tax, okay, because the tax is going to be different for every person watching based on all kinds of other things that could be in your tax return. In this tax return, there's only one thing, all right? So we could see what the tax is on that. It's $48,028. If you recall, this number was 0 before I entered any information about this. I had cleared out this example tax return. So this is the tax based on this number. But remember, that's impacted by the filing status of this individual, like single, married, filing jointly, head of household. It's influenced ultimately by other income, other deductions, other situations, whether you're a professional real estate agent or not, whether you're actively participating or not. There's all kinds of things that can actually go into the tax calculation. And TurboTax is very good at calculating that. But TurboTax, what it doesn't do is it's not a mind reader, like I said. It's not going to know all of this source information that you need to enter in order for it to calculate the tax. That's why you have to go to your settlement statement and your other documents. Gather all of this, line it up in a nice, neat format like this so you can appropriately determine what your total gain is going to be, and then TurboTax will be able to calculate the tax due on the sale of that property. And also, if you want to check that this gain is showing up appropriately on the main form of your tax return, Form 1040, you can just go right up here to the top of the list, Form 1040, and just scroll down a little bit right here on line 7. There's the 320,090 right there. That is the taxable gain that we calculated using all of your source data and using TurboTax to figure out what the ultimate tax due is on that gain. If you enjoyed this video, please remember to like and subscribe, and let me know in the comments below what other tax issues you may be facing so I can make some future videos about those.